I'm recording. Okay, great. So I'll repeat a few of things. So um, today, what I am going to cover is um, okay. Before I go into that, right, I do want to put this disclaimer out. This is just telling you that, guys, I am not a financial advisor. I am not registered with SEC. Whatever I am sharing on today's presentation, it is my personal opinion, my views, my thinking, and if you choose to use that information, then your actions are totally based on your choice, and I have no relation with it. I cannot be accounted or blamed for those. So that's a basically financial disclosure thing that use this information as educational purpose. Use this to increase your learning and see if it helps in increasing your learning. Okay, so that out of the way, I'm going to repeat this again because I just started the recording, and what I'm going to cover in the next 45 minutes. So I've broken this session in two parts, and I'm going to tell you what I'm going to try to cover in the next 45 minutes. I'm going to go through indexes, SPY, ES, SPX, pick. We just go through some of that. I'm going to go through QQQs, the tech sector, IWM, the small caps. Uh, and then I will talk a little bit about the bonds, the interest rates, and dollar. And as I was mentioning, usually I do not pay a lot of attention to these on my day-to-day trading, but when they make a bigger change, when there's a landscape changing, I do like to make a note of it and see how it is going to impact the market. Bonds are definitely a bigger than equity market, so it's important, and interest rates impacts everything. So I'm going to talk a little bit about that. Once we are through the interest rates and things, I am going to go back into the sectors that we have. We have around 11 sectors in SPY. I'm not going to go through all of them. I'm just going to go through a few of them, trying to give you an idea around which of these sectors are setting up for a breakout in the coming weeks, which of these sectors are around the resistance, things like that. Uh, so that is pretty much we'll try to cover in the first 45 minutes. And then I have another link, and we can share that link too if folks wants to join in. In the next 45 minutes, I would like to go through some charts, especially as we are starting the earnings season. I know most of the folks are interested in fangman stocks, right? Like Facebook, Amazon, Netflix, Google, these hot darlings of the equity market. So I'll just go through those charts to share my personal opinion on where they are, whether they are setting up for a bullish run, bearish run, if there is any kind of trade setup there. Um, and if we have time left, we can go through some of your questions, Q&A things. So that's my agenda. I would request people to hold on to their question, post your question in the chat. I assume Upen is going to join us, or he should already be in the call. I can see all the participant list, but let's take your question and answer at the end of the session, and I'll try to address them at both the session ends. So let's get started, right? I am going to get this PowerPoint presentation off this thing, and we'll just jump into charts. So I am a technical analyst. I look things based on the price action. I try to use price actions to figure out what is their potential move. What are other traders trying to do, because you can't hide price action. So right now, what you're seeing is um, so I'm going to go through some of these charts, and these charts are a good indication on the price action. They try to tell you where we are going and how we are doing. So the first one that I'm starting off is with SPX, and um, okay, I think I need to get a pen of mine that I can use to draw. So give me one more second, and let me get my pen up. So there's a tool that I can use for drawing on the screen, so I can show them as a screenshot. So give me 1 second. But while this is happening, I'll continue to talk. It might just take me another couple of seconds for it to start. So, okay. So what we are seeing right now is the SPX in the chart for XPX. This is nothing but an yearly chart. I have, like just basic some lines here. We have seen since our November elections, we have been the markets have been doing good, right? I mean, we have almost all got 600 um, points in the indexes, especially on. Okay, I got my pen up, so let's go use that. Okay, so you can see, right? These were the March lows, and today we are trading here. We have had a good run, right? If you are wondering, in my opinion, this run here, it's not extended. It's like, I mean, what I mean to say is we are consolidating and then making a breakout. Then we take a couple of weeks to consolidate in these areas, and then we make a breakout, right? So, in my opinion, the markets are looking good to continue to do their run. If you ask me, right, like there will be what we have seen last couple of weeks is that there are intraday sell-offs that get bought out, right? So if we go back into the daily portion, you will notice that um, you will see these kinds of sell-offs happening. These kinds of sell-offs, they appear, they appear from nowhere, and they take off. They take the weak hands off. The guys who has, who are who are trading on a short-term time frame. Uh, the market takes them off, and then they continue to go up. So it's very much visible. We are making higher highs, and we continue to make new highs. Um, if you are wondering, what are the levels to watch, right? So a basic trend definition is as long as we continue to make the high is higher than previous highs, and the lows, we continue to make them lower higher than the previous one, we are trending, right? So you can see we make a higher high, and when we come down, that low is higher than the previous lows. So we are still trending, so we made a higher high, expect expect some kind of a pullback to make a low, to make a higher low, and the trend keeps on going until we start violating this particular thesis of higher high and higher low. You might see this in two forms. So going forward, what you should be watching is, let's say there's a pullback and we come all the way till this area. Now, obviously, this will act as a support. So, and then when we bounce, are we able to take out this high, or do we make a lower high and then rotate? Right? So that is what you should be watching as an indication or a signal to see if the stock is, or the markets are changing trends. Right? Now, obviously, change in trend does not mean that it's the opposite. So the market can do one of the three things. It can trend, means it can keep going up and up and up, or once that trend changes, it can actually go sideways, or it can even reverse and start going down. So it is possible that you could see a market make a pattern like this, where it goes up, goes down, goes up, goes down, goes up, and then it breaks either upside or downside. Okay, so that's about the market. That's about SPY. And if you see, currently SPY is SPY, or you can say SPX. They your 36, 34 is one level. This is definitely a level where we have found support, and higher than that, we have found support around 36, 30, around 36.63. So these are SPX level, and they'll be a little bit different on whether you look at SPY or ES. SPX, I picked up SPX because it's a cash index, cash future thing. Um, Gives you a better idea about the market. But overall, SNPY, um, we can use this as one of the levels. You could also draw. Um, Actually, I was more looking towards a channel here, an uptrend channel, something like this, wherein we are kind of breaking above. What happens is the Thursday and Friday move, we broke out of this channel. Um, and what I'll be watching going in the next week is, do we fall back and then come back to this range? So that's one thing that's one possible scenario that the markets can act. The other thing also is, so the market does a couple of things, and it's hard to tell which direction we are in. But for example, like if you see, there was a good consolidation area in this range here before we broke out. Like we actually tried to break out, but we fell back in here. So if the market has to, there is a duplicate, yes. So you can, so yeah, we actually even did that. So usually when you have a consolidation area, you can take that area and double it and say, yeah, if you break above um, if you break above this consolidation area, then you have a room to go all the way here. So you can see we pretty much touched the top of it. So now it, in my opinion, it would be a good idea to basically wait, see what the market does, give you a direction, give you an indication that what it wants to do. So I wouldn't be surprised if we see some little bit of sell off or sideways move and try to consolidate. How we did here. We made a move, we consolidated, we made a move, and we consolidate. Um, so that's one way of to see, right? As long as we continue to trade above 3,700, 3,700, I think. Actually, I would say as long as we continue to trade above 33,750, and this is on SPX, and we can find that number on ES2, we probably we should be more looking for opportunities to buy the dip. Once we start going below 3,750 is when we should basically be a little concerned, or actually be looking towards puts in order to protect your long-term investments, right? And keep in mind, right, these levels are pretty close, so these are short-term moves. Uh, for a longer term direction, we have to look at a longer-term chart. We really need to see some dents in a longer-term trend. And what I mean by longer-term trend is you have to go back onto the yearly chart in order to see, for example, like um, we take this low, we can connect this low, and when we draw, so to me this is my trend line. As long as we continue to trade above this trend line, any pullback should easily be bought. uh, I would once we break below this trend line, this one that I'm referring to, that's when you can think that, okay, now the landscape is shifting and I need to be a little bit more careful in order to see what happens next. And you will notice that the trend lines do break from time to time, and they will then form a new pattern, new correction, and they will give you the next direction what to do, right? As you see, this chart is pretty clean. I'm not using any indicators, but the most I do in my chart is I use SMAs. They are a good indication to me in terms of direction and in terms of where the market is going, and what to do. So a couple of things I look at we can observe in this chart is this particular line that you're referring to. It's a 20 SMA, 20 simple moving average. These are not exponential. You can play around with them. There might be not a lot of difference. I tend to stick with SMAs. Uh, they have been, to me, they seems to be a more reliable to me. The way I trade, the way I think. So as you can see, this last 3-4 weeks, we have been hanging around the 20 SMAs, right? So this move up is the only move where we have gone a little bit above 20 SMA. Otherwise, if you see, we have been pretty much in the 50, 70 point range from the 20 SMA. That is why I was saying earlier that Are we extended? Is this rally extended? It If you look from here, you may seem that we have an extension, we have been extended. But if you look closer, you will notice that actually no, we have been making smaller moves, going sideways, smaller move, going sideways, and this was a little bit of a run in quite some time. So they, I would not be surprised if we see a little bit more run before we see a pullback. But but these are all intraday shenanigans, right? You know how market likes to get you wrong most of the time, get you on the wrong side of the trade, and then go the other way. So those are going to be, so use that as an opportunity to add some positions. Sure, day trade, swing trade, use those opportunity. I will start getting worried once we start closing below the 20, because we have clearly seen that 20 has been acting as a very good support on SPX, ES, SPY, whatever you can take. So when we break it, that's when we go test the next one. And that comes around 3,620 level on ES or SPX. Uh, so that's my view on SPY. If you look at other indexes like NDX, NDX is equally strong. The NDX also has been chugging along its 20 SMA for last couple of weeks. We can see that actually. Come on. So we can see, right, NDX has been moving around. So people who follow me on Trade for Life server or on there, uh, I went a little bit bearish when this happened, because in a long time we have not seen NDX close below its 20. When this happened on the Capital News, that is when this was the first day when we closed. We took the puts, but obviously that was a fake out, didn't work out, and that's what gave you this 2-day squeeze kind of a thing. People got caught on the wrong side, and they had to push the market higher. But same thing, same fundament, same stuff there. NDX is hanging along on the 20 SMA, and is moving in a nice pattern where it gives you a run, consolidates for a few days, and then gives you another run. So these runs are not huge. These runs are not like these. One thing that you might have noticed is, as we are going higher, the runs and the daily bars are getting smaller and smaller. So keep that in mind. Keep that, especially when you're playing with options. Don't try to bet a lot out of the money, because you know that on the markets you are not getting these big moves, right? The market is not running big anymore. What you're getting is a slow grind up. What you're getting is a slow grind up. So keep that in your mind whenever you are betting through options. So that's about NDX. Nothing much to talk, like nothing more to add. The chart looks pretty close to SPY or SPX. We have these previous highs that was taken off. It definitely took it a little. NDX took a little while to break, but right now both NDX and SPX, they both are making all-time highs. So they are in sync. What I mean is, these are the two indexes that are in sync. They're trading together. And especially when indexes are in sync, that actually gives more power to the market. Think about the pull and push. Stocks that are going down versus stocks that are going up. When when most of the stocks that are in NDX are also in SPY, or Standard and Poor 500. So when technology sector is doing good, it gives a push. And later on, when I talk to you about the SPX sector division, you will see why that happens. If you don't know if you already don't know about it, that's when you can. I'll show you. Um, Going to the last one is IWM, or Russell 2000. Um, Russell has been the outperformer since the elections. This thing has been going up, up, up. And if you have heard me talk about Russells in past, I have always mentioned that any test of 20 is a buy, because ever since it it broke out, it has not given any opportunity to anybody in this whole run to get an entry. So what happened is the little bit of consolidation that you saw last week, it easily got bought up, and you see the big run. Um, so I'm a little bit cautious on IWM. This week on Friday we did open, like a starter position or a one contract, somewhere in the March. We just started with one IWM put to see if there is anything real going on, because Friday we saw the first half of the trading. We were trying to make a dark cloud cover kind of a pattern where we're trying to take away all the yesterday's gain, but then all of a sudden in the midday, post midday, things changed, and stocks rallied. But Okay. So yeah, I think got my 40 minutes warning. So I'll try to rush a little bit here, but and whatever is missing, I'll try to cover into the next session. So I have this channel that's been running for quite a bit time, and this is the top of the channel. So just watching carefully here to see if there is any kind of sideway action, some give up from this long run here, if there is some potential. Otherwise, if you put all the three indexes together, IWM, SPY, QQQ, they all are rock solid. They're all making new highs. They all are in this pattern where they make higher highs, higher lows, higher highs, higher lows, and they all are sticking above 20 SMA. So as long as all these three patterns are intact, you don't need to be worried from the market perspective. Your long positions, hold things that you've been holding, hoping that the market would go up, until unless there is a fundamental problem with the company. We will see that there are companies who are not moving strong in these markets too. They are going sideways to down, but those are company specific issues. But in general, the market is healthy. They can continue to go up. Anybody who is thinking that, you know downfall, there's a turn coming around, um, uh, um, uh, the next thing that I'm going to talk about is basically a little bit of crack that we are seeing in this whole, we are starting to see. So next week, what happens? Is something to watch around to see if this crack widens up and does it takes equities along with it down. So far that's about indexes. Anybody has any question on this before I move on to the next area, which I'm going to talk about, my observations on bond market and interest rates. That, and we can go back to Q&A even later part of it, but but if you have anything, I can try to answer quick. Else I'll move on to the.
Hey, Vikas.
Yes, please.
Hey, this is Nitin actually. So regarding SPX, right? You said it's a cash index. So what does that mean? I mean, what is cash index?
Yeah, it's a cash settled index. Basically, SPX does not represent any stock, in anything, right? So what I mean is, let's say you buy SPX, or you buy a spread on SPX. At the end, when your option expires, you get the money out of it. So your broker will never will never do a margin call on those, because it's a cash settled future. So let's say you buy SPY, and you have a SPY call, and if you have noticed, all the brokers, they're trying to make sure that you close your option before the expiry, and if you don't do it, they go and close it by themselves. That is because if the option closes in the money, then that is an automatic exercise, which means you need to have the money to fulfill that exercise amount, right? So that is why they'll go ahead and close it. So let's say if you have one contract, SPY in the money contract, and you don't close it by Friday, then you need $30,000 to own that 100 stocks for that option. If you don't have it, your broker is gonna give you a margin call and say, hey, you need to put this equity, right? But for SPX, what's going to happen is, if you have, let's say, 3,700 calls, SPX calls, and it closes in the money, you won't get any margin call. What will happen is, you'll get the difference between the call and the closing price, and you'll get the money. That's the
Okay,
difference
got it.
between cash settled futures or index versus versus the normal indexes.
Okay. So does that mean like trading SPX is more safer than SPY? I mean, is that an underlying statement we can say?
Trading any instrument is equally risky and equally profitable. There is no difference. SPX is 10 times SPY. So one SPX contracts will be quite a bit equivalent to 9 SPY or 10 SPY contracts, give or take some dollars, some value, and that is, you can see that in the value itself, right? SPX value is in 3000, whereas if you look at SPY, it is in 300s. Roughly 10 times difference,
Yeah, right. Actually,
right?
I mean,
So
like
you
I do trade SPX, but like it's such a the the price is too high actually, and
Yeah, we should
sometimes
we should take
I'm
this.
just
Yeah, we should take this question offline because
okay.
I it's very specific to you personally. Which one you should. But I gave a general answer that that the SPX is the index. It's the value of the index. With the current weight of all the stock and things. 1 unit of that's what the value is. SPY is an exchange traded fund wherein it trades at 1/10 of the SPX, and the holding is also 1/10 of the SPX. So everything is proportionate to that. You
Okay,
know,
got it. Yeah,
not
thanks,
exactly
Vikas.
1/10, but close to 1/10, I would say.
Yeah, thanks, Vikas.
Okay, cool. I- um, Upen, are you
Because
are you there? Upen, are you there?
Yeah, I'm
Okay,
there.
Upen, do you want to share the second link? And why don't I? So we have only 5 to 7 minutes left for this session, Zoom session, because it's a free, it's going to expire. So, Upen, why don't you share the second link in the chat? So
Yeah,
once we end this one, guys, please join on the other one. Till then, I'll be happy to do a Q&A here. Let's do the question answer here for the next couple of minutes.
hey, Vikas, this is Anil here.
Hello, Anil.
Yeah. Hi. So, Vikas, one question. So, all this recording and whatever session you are taking, is this more about options? If one does not understand options, will it make any sense to the person?
So if you heard me for the last half an hour, I did not talk anything, like a little bit other than I mean, I only had 1 or 2 minutes in options. So this is nothing to do with options. What I talked last half an hour is a very high level idea about the market. Where do I see the market going forward? Now, if you have an idea that, okay, the market looks bullish right now, there are, like, for example, like I said, let's say if you heard me and you decided that every time SPY comes at 20-day SMA, I'm going to go buy something. Now you could buy things in options or in equity. That's your choice. But that's an indication. So this is about market overview. It has nothing to do with options or equities. This is just trying to give you an idea about where the market is going. What am I observing in terms of support? Where do I see? When would my bias change from being bullish to sideways or negative, so that you can position yourself, or I can position myself for the next shift in the market.
Got it.
Makes
So,
sense, right?
one
and
other question is,
here is something to add, right? So because if you bring up your IWM chart, right?
Yes.
Um, you know, Technically, guys, I mean, you don't have to do options. Like if you think about it, see, if we wanted to buy IWM related stocks or or even the index, right? You can buy the index like a stock.
You
Nothing happens.
ETFs, right? IWM
Yeah,
is an
it is.
exchange traded fund. You can own this
Exactly.
as part of your. You can own this as a stock, as a normal stock.
Mhm.
It's gonna cost
So
you $207.72 as for yesterday's whatever last closing price.
Mhm. What we are talking about here is, if you remember, Vikas was mentioning that it was never hitting that 20 SMA, uh, and then we had a pullback, and that's when people were waiting, and then they loaded up on the last 1 week, or was it? Is it two
Yeah,
weeks?
no,
So
it's
this Uh-huh. So this is the thing that we are talking about. You don't have to, own any options or take any position in options. Let's say you have 20,000 that you parked outside during the pandemic and never entered the markets, right? And you want to find these things so that that's when you want to get in. Let's say you got in during those when it made the 20-day SMA, you're now up almost 10% in the last 1 week
Yeah.
or 2 weeks. So you get the idea, right? I mean, it's not, we are not
Yeah.
discussing a particular option here. We are discussing how the trends are going as well. I mean, in the broader markets, then you can make decisions when you can enter, when you want to take something out. You can actively manage your 401ks. I'm not saying go day trading on them, but like, a few months, every quarter, if you want to rebalance or do something, there are times when IWM is showing a lot of strength, whereas, NASDAQ is lagging a little behind. So you got the idea, right?
Yeah.
It has
I,
nothing to do with that.
so one follow-up question is, where can I see these charts? I have, pardon my ignorance here, never tried looking at it, and now that you guys are teaching us, it's kind of a good learning for us to.
So every broker has its own platform to show you the charts and things. Um, so right now, the tool that I'm using is Think and Swim. The chart is there, but um, obviously, I'm not trying to advertise any specific platform here. There are a lot of free tools. I like to use TradingView. It is a few. It's a free charting software, web-based charting software. You can use that too, or there are stock charts. There are a ton of them. I'm just sharing like free. This is TradingView.
Got
um,
it. Yeah.
I, I use that as an alternate also sometimes. So uh,
Okay.
open, if you want to add a couple of more, just for a go ahead.
Yeah, that's good. I mean that's about it. Like, you can get any charting software, and these days everything is
Okay.
as good as.
Thank you.
But
Okay.
if you want this detailed setups, right, like what exactly Vikas was showing, and you want to, if you like this kind of setup and you think this is making more sense to you, or probably if you are trying to get more knowledge from Vikas, and please contact offline. Probably it may take few hours for him to do this thing. I mean, give you probably a one-on-one session or maybe a group session for your friends, something like that. You can contact us.
Okay.
Okay, so guys, we have less than a minute. I would stop the recording, and let's get on to the next link, next room, before we get kicked out of it, right? uh, okay.
Yep.